welcome to another episode of Financial Minds Meet the Experts. I'm your host, Jaime Agostino. Today, we're discussing an exciting new partnership between Vizo Financial and TCT Risk Solutions. Joining me are Randy, Tim, and Josh to explore how this partnership came together, the solutions and services now available to Vizo Financial members, and the benefits credit unions can expect from this collaboration. Whether you're looking to enhance operational efficiency, strengthen risk management, or discover new opportunities for growth, this conversation will provide valuable insight. So welcome, everyone. Thank you so much for being here. So would each of you take a moment and introduce yourself to our audience? So Randy, do you mind going first?
Absolutely. My name is Randy Thompson. I am the President CEO of TCT Risk Solutions, which is a QSO that focuses on enterprise risk management for credit unions. And I emphasize for credit unions. I'm a recovering banker who I'm now 40 years free of banks, but I am an absolute advocate of credit unions. The only thing I care more about than credit unions is my 37 grandchildren. So.
All right, Tim, how about yourself?
Hi, I'm Tim Sustak. I'm the Chief Treasury Officer with Vizo Financial. I've been around the corporate in a number of roles during the years. I have one son, but I can't claim to have 37 grandchildren. So I'll just stop there.
Yeah, I don't know too many people that can claim to have that many grandchildren. Josh, why don't you go ahead and introduce yourself as well?
Yeah, I'm Josh Faith. I'm the Lending Services and Treasury Director. I've been with Vizo going on 6 years next month. Before working here, my background's been in lending and collections at finance companies and small community banks.
Okay. All right. So let's start with the big announcement. So what led Vizo Financial and TCT Risk Solutions to form this partnership, and what goals are you hoping to achieve together?
Yeah, it really started because, we decided as Vizo, we really wanted to do more to help our members with their lending operations. It's something that, we had a few tools here and there, but really didn't have a comprehensive suite of offerings to help them with their lending operations. And it's what credit unions do, right? They're primarily in business to lend funds to members. So we were able to find out about Randy and TCT, and really liked the tools that he had built and the culture there. And we talked for probably a couple of years, Randy, through it, and decided it'd be great to work together. So we ended up forming a partnership, and what can credit unions expect? I think just a great partnership that really has credit unions first and foremost in mind, and people that really want to work together to help credit unions and develop whatever tools they need to help their risk management operations. So I would say overall, Randy, do you have anything to add there?
Well, from our side, I would just say that we were fortunate enough to get to know a member of the board as a client. I don't like that word. We don't have clients, we have friends. I feel that way. And then the past chairman of their supervisory committee, and they, as we would talk, said so much about Vizo, and I guess they kind of talked to the management there, and we got to know them a little bit. Our original 7 credit unions who formed with me, the QSO, are all small credit unions. Some of them were as small as 30 million when we got started. Actually, one of the owners was $19 million when we got started. So we've always had a very, very soft spot, a very focused attention to small credit unions. And when I met Fred and Tim and Josh and the other management people, Mark, it was very clear to me that this was a very different corporate, because I've known people from corporates all over the country, and this is a different group of people. This is a group of people who are sincere, who honestly share a concern for credit unions and want to do everything they can to help, and that's unique. So when I found that I had the opportunity to work with this quality of people, that was a no-brainer.
All right. Well, thank you, Randy. So For those that aren't familiar with TCT Risk Solutions, can you give us an overview of your organization and the services you are providing to those credit unions?
Absolutely. As I said, we are a QSO. We have about 9 employees. About half of them work in other states and remotely. So we've kind of got a handle for that. Our programmer is a very top-notch guy. And what we've done is we have multiple suites. We have a suite which we call Cost Pro, which is loan pricing, deposit pricing, and cost analysis and concentration risk. All of those are online, so that with 24/7 access with a cost-based approach. Now, you may be sorry you asked me this question because I could go on for a long time, but I'll be very brief on each one. You just clap your hand if I need to be stopped. So that's the helping credit unions get loans on the books. Also, we have an interest rate risk suite that's designed more for smaller credit unions. That's not that NEV stuff. It is earnings at risk, which is internationally widely acclaimed and is actually acknowledged by NCUA in their examiner guide as an important component that gets behind, according to them, and explains numbers that NEV can't. So has a base case, it has a limits calculation tool that's online, and a simulation tool that's online. So that, again, 24/7, you can look at and analyze what interest rate risk impact would be from different things you want to do, strategies. Then we have a liquidity suite, which has a tracking on a 3-year tracking of liquidity day by day throughout the credit union's history, as well as a 12-month liquidity shock test, which projects 12 months out where you'll be with certain situations. And then finally, we have our portfolio management suite, which we're partnering with Vizo on, where we do both a scale approach, which is like from the feds. It's like what NCUA has on their website. But we also have a credit migration-based CECL calculation that actually saves credit unions money, which reduces their allowance requirement by sometimes as much as $1 million. So that includes an improved deteriorated loan report and a delinquency tracking that helps credit unions manage the money. I don't want to just calculate a number. I want to help them with tools that will actually help them control and limit what that exposure is.
Okay.
So that's a brief summary.
Okay. All right. So, Josh, what specific products and services will now be available to Vizo Financial's members through this partnership?
Yeah, well, as Randy was talking about, they have a lot of great products. Some of the ones that we think will have the most immediate benefit to our members are the loan pricing and deposit pricing tool, and the credit migration tool. And as I said, my background's in lending and collections. So, looking at it from that experience, I would have loved to have the loan pricing tool when I was in lending. That was part of my job to gather, pricing from our competitors' websites, and then we talk about it in our loan committee. And in the end, you'd end up setting a rate that was very similar to them because, the thinking is you have to set a similar rate in order to get the loan, or it's just, the member is going to go somewhere else. And that's not necessarily the best way to think about it. With Randy's tools, they've done time and motion studies using your own data, from your call report, and they can determine, how much does it actually cost to book a loan across departments, generate that loan so that kind of what's that break even, to rate that you need to get to. And then from there, you can actually make an informed decision on your rate. Your board, your management, whoever's responsible for setting rates, they can come up with a margin that they want, and from there you could create a rate sheet provided to your lenders, gives them some flexibility to, if a member comes in and wants to see if you'll match a rate, that lender might be able to approve, that rate match without having to slow down the process and go get a rate approved, maybe offer a better rate if it's within that margin. And you'll still, make some money off of the deal. With the tool, the other great thing about it is you can see what the impact would be if you go down the credit curve. If you start looking at C, D, and E type loans, maybe you can compete more in your market, help, the underserved communities and see what kind of impact that's going to have to your bottom line. You'll be able to set a rate. You'll be able to see, the tool takes into account what's going into your allowance, what kind of losses you might expect, and then, what does that do to your bottom line? You could use the tool for loan promotions. It's just a great tool that gives you an informed decision. The other tool, the credit migration, as a collector and a lender, I would have loved to have that tool because, too often when we're doing like a loan solicitation, you're pulling a report that shows you a credit score that's fixed in time from the last time you did a loan, which could have been 2, 5, 10 years ago. That credit score looks great. That member looked great at the time you did the loan. They're paying you fine. You have no reason to believe that there's a problem, so you solicit that member by phone, by mail. You get their hopes up, they get excited, you take the application, you pull their credit, and you find that it's crashed. They've come into hard times. Now you have to go back and potentially turn the loan down. That hurts your institution's reputation. That's going to hurt the credibility of your lender, who's on the front line. With this tool, they're periodically updating the FICO scores through soft pulls. It's not going to impact the member's credit. Um, and you're going to be able to see if they're deteriorating. So now when you go to do a loan solicitation, you'll know I don't want to contact that member for a possible loan. But not just that, on the collection side, you can now get ahead of the delinquency. You can reach out to them, not to solicit a loan, but to see what's going on, and then maybe you can get a loan out of it, but the loan now is geared to help that member. Maybe you find out that they're coming out of this, tough period. They just can't get ahead. So you could do a debt consolidation loan. You can pay off credit cards, close them out. Maybe you could secure it with real estate and strengthen your loan, lower their monthly payments. You can use this tool to develop and build a loyal, strong, member relationship. So these tools excite me just from my own experience. And I think these will be really beneficial to our members.
Okay. All right. Well, thank you. So Tim, from the Vizo Financial perspective, what needs or challenges were you hearing from your member credit unions that made this partnership a good fit?
Yeah, well, I think I'd go back to a lot of what Josh talked about. I mean, we could see certainly during the last liquidity crunch, one of the things that exacerbated liquidity problems for some credit unions is they weren't keeping up with market rates. You had credit unions lending at auto loan rates that were well below market rates.
Mhm.
And I think some of that comes from the things that Josh talked about, not really having a good grounding in pricing loans based on what they cost you, risk-based pricing of what you should make on a particular loan, but kind of, looking out the window, as we say, and seeing what the credit union across the street does or the small bank down the street does. And that causes loan pricing problems, not only from a earnings perspective, but as we saw during the liquidity crunch, from a liquidity perspective as well. So I think that's one set of challenges that credit unions we certainly saw them have, a few years back. And as Josh pointed out, this tool that Randy has developed for loan pricing, really helps get a credit union in a rhythm of pricing loans with a purpose and a reason and understanding of what the costs are. So they're, in practice to do that, and they're not caught behind the curve either by what their own costs are or what's going on in the marketplace. I think the other thing is, obviously during COVID, we saw a lot of folks get money from the government, and delinquencies went way down, right? And charge-offs went way down. And now, we're on the rise back up. Concern is how far will we go here with the economy still doing well, but consumers, there's a lot of stats out there that tell us consumers are probably getting more stressed. So, you always want to stay ahead of credit problems in the portfolio. And I think Josh did a great job talking about, why the credit migration tool that Randy created is a good platform for credit unions to manage that credit risk in a portfolio. And that's always a concern for credit unions and banks, right? Is the ability to manage that. And as Josh said, get out in front of it to be proactive, to prevent issues from happening, and to be able to most importantly, to help members through credit problems rather than having them have the issues and then have to come back to the institution with an issue, right? You can get ahead of that and help the member through that. So I think it's just a great set of tools that provide good, actionable information, that credit unions can use. It doesn't take a heavy lift. You've got a bunch of people behind the tools that really know what they're doing and want to help. And it's good, actionable data that you can use, right now. You don't have to sift through a bunch of extraneous information to get to the useful stuff. The useful stuff is right there, and really good tools for credit unions to manage that risk.
Okay. So, Randy, what are some of the biggest operational strategic challenges credit unions face today that TCT Risk Solutions is helping to address?
I really appreciate that question. There's one thing that's right at the top from the research we've done. I have doctorates in economics and in public health, and with an emphasis in statistical design. I just say that because I constantly look at things as a nerd would through numbers. And one of the numbers that scares me the most is what I call net fee subsidy. Over the last probably 15, 20 years, credit unions have gone to a position where they are dependent on fee income, not for a profit, but to break even. We have credit unions that are relying on millions of dollars of fees just to cover operational costs. That's not a good model. That's not a good model at all. We need to get back where it was 30 years ago or 40 years ago, where there were no fee subsidies. As a matter of fact, there was a time when credit unions said, we don't charge fees because we lended effectively. Now, hand in hand with that, there's three things, I think the three that I would suggest. One is that credit unions are too focused on A-plus borrowers. There are only 20%, according to data from all three bureaus that was published in CU Online, there's only 20% of the population that have A-plus credit. 20%. That's not a huge amount. There's another, is it 30%? Not quite, no. Anyway, 20%. The average distribution of loans in credit unions, 54% of all their loans are to A-plus borrowers. That's average. And there are some credit unions, because we've done the studies, that have 78 to 80% of their loans to A-plus, only 20% of the population. Well, when there's everybody trying to drive in this one group, guess what that does to rates? Because the only way you can compete is with rates. And so it drives rates down to absolutely unrealistic levels. Okay? Well, also, A-plus borrowers only use 7% of their lines of credit. So you make these $100,000, $200,000 HELOCs to A-plus and A borrowers, 90% of the money is never going to be used. You're not going to earn a penny on it. Okay? So what we like to try to do is we try to help distribute those loans, like Josh said, down the curve. And I don't want to get into all the details, but we've created 4 personas: the Ruths, the Henrys, the Johns, and the Liz's. And the Henrys are the ones you need to be worried about. Well, when there is someone who's going down, like Josh just said, we can act early. Credit is not a score, it's a story. And if someone's starting to come down, and like Josh mentioned, and we can say, hey, I see that your credit score is dropping. What can we do to help you? We could have individuals who we help early. There's one credit union, I don't want to get ahead of myself, but there's one credit union I was just talking to who made consistently over the last year small unsecured loans to help their members catch up on their car loans. And then they paid them off, and they're consistently on time from that point on. So I know that credit unions can tend to be a little bit afraid, and I blame the regulators a lot on this. I'm sorry, that's probably not good to say, but I sat there in meetings where the regulator said, stop making those loans and charge more fees. I heard that. That's what the direction was. It's not good. It's not the good way. We need to become better at diversifying our loans and reaching out to the people. It even says in NCUA guidelines in their guidance letter, make loans you would otherwise avoid. Reach out and help the underserved. That's not A plus. That's not A plus borrowers. And so that's why we try to focus on helping credit unions distribute those loans. Like Josh said, we've seen credit unions increase by hundreds of thousands of dollars after setting aside the money for allowance, the provision, by simply diversifying their loan portfolio. I'll stop there. I could go on for hours, but I won't.
All right, so my next question, Tim or Josh, either one of you, what makes this partnership different from other vendor relationships in this marketplace?
Yeah, I'll start there. Two things, culture and focus. So, as a corporate credit union, we realize that we exist at the pleasure of our membership. They created us, and the only reason we're successful is because they support us every day, and they see value in us, and we appreciate that. And we remember that every day because the members are our focus. We're here to help them succeed because if they don't succeed, we obviously can't succeed. And that same type of culture, that same thought process is what drives TCT. We're focused on credit unions. TCT is focused on credit unions. They go into the shop every day trying to figure out how they can help credit unions. You heard what Randy said. The only thing he loves more than credit unions are his grandkids, and that's saying something, right?
Yeah.
They are really credit union focused, and like us, it doesn't matter if you're a $20 million credit union, a $2 billion credit union. We want to help. We realize each one is going to take a different sort of help, a different focus, but we want to help all of our credit union members. And the culture of these two organizations just fit together so well that we were really happy to see this partnership come together. We're focused on credit unions. We want to see them succeed. And that's the first thought when you walk into the shop every day. So,
And I could add on to that and just say from my own experience, sometimes when you're dealing with, a vendor, another company, the relationship can be cold, sometimes, they have a product, they're trying to sell you the product, it's just there's not an intimate relationship there. With TCT, what I've come to notice is you really do care. I've been on several calls with our members and them, and, their goal is not to sell you on every product that they have. They're looking to see where do you need help, and then do they have a tool that can address that? And they'll focus on that. Let's start small. Let's get you the tool that you need right now. Let's work with you. Call anytime, and we'll get you where you need to be. And then from there, we have other great tools that you over time maybe you can take part in. So Randy cares very much about the credit unions. He also cares very much about the movement. I mean, you've heard him say, he wants to see the underserved, be served.
Yeah.
So I just think it's a different relationship that you have a company and a group of people here that really care.
Yeah. Well, and that kind of goes back to something Randy said earlier. These credit unions aren't clients, they're friends, they're family. So I think that's a testament to what you're saying there, Josh. So Randy, can you share an example of a success story that demonstrates the impact these solutions and tools can have on a credit union?
Oh, I'm so glad you asked that because we have a credit union who came on board early on. They were actually one of the original 7 there's an owner of the QSO. They invited me about 17 years ago to come up and start working with them. And they bought into all the tools. They're in way Northern California. when I started working with them, they were about a 49, maybe $45 million credit union. Okay. They had about a 58% loan to share. And they were, they were about, I mean, they were doing okay. And they were making about a 20 basis point ROA. They started looking at diversifying their loan portfolio. And I'll share with you this interesting story that I was sitting here at this desk, and I got a call, and it was I answered the phone, and Randy, I could tell from the urgency in the voice. I said, "Well, Becky, how are you?" She says, "I don't know. She's the CEO. I just calculated my allowance, and it's up doubled. It went from 20,000 last month to 40,000 this month. I think maybe we should stop this whole thing. I just don't know." Well, I get a lot of these what I call walking off the cliff, or the ledge calls, and we bring them back to where they're going to be fine. But I said, "Listen, Becky, could you do me a favor? Because 40,000 a month, that's $500,000 a year. Criminy, that's a lot of money. I can see why she's concerned." I said, "Could you do me a favor? Because this is about 6 years in. I should have said that, about 6 years into the process, we're building and growing." And I said, "Could you have your financials there, right?" She said, "Yes." I said, "Well, could you look at your net interest income from loans last month and this month? Because you said it went up 20,000 in provision expense. How much did your interest income increase over that period?" And she said, "Well, let me do it." And I could hear her hands on her adding machine clicking, which, yeah, it went up 140. Never mind, she said, and we just moved away from it. Yes, her allowance went up, but her income went up 6 times that amount. Okay. Today, they're a $150 million credit union with an 85% loan to share ratio, and their ROA is 0.95. They made $1 million plus last year. Now, interestingly enough, when we got them going with the delinquency tracking, they were able to identify there's a whole bunch of members who had been 60 days delinquent for 3 or 4 months. Should that surprise us that they can't make 4 payments in a month? We calculated what a fair payment was for them, and then they went back in. They showed that they'd been making a payment every month. They just couldn't make 3. They removed 27 people from their delinquency list, and not one of them has come back on in the last 2 years. Not one. They're just, and with the credit migration, they've been able to identify early and prevent people from, going all the way to where they were now delinquent and in trouble. So I've just seen this credit union just flourish. Their CEO retired, a new CEO's on board, and she's able to just jump right in and use all the tools to make good decisions. So there's an example, a real life that's going crazy. They've tripled their size, doubled their loan portfolio. Well, no, they're 120. They've gone up 100 million in loans, and it's working.
All right. So Randy, for credit unions listening and just heard that story and they're like, how do I get access to these tools? What does the onboarding process look like and how easy is it for them to get started?
Everything except credit migration is online. Okay, so to get going with loan and deposit pricing, it'll take them a half an hour to pull the data we need to send in to us, and then there'll be about half an hour to 45 minutes on the phone on a Zoom meeting, getting them going, giving them the training they need, and then they can. We've had some people who said, "I want to get started," in the same week that they signed the contract, we had them pricing their loans within that same week. Sometimes it's the next day.
Okay. All right. So Tim, Josh, looking ahead, how do you see this partnership evolving and what opportunities can Vizo Financial members expect in the future?
Yeah, I think what Tim had said before, this is a partnership that we took our time with. We got comfortable with TCT, we got to know them. We're very much interested in the success of this partnership. There's great people on both sides. And TCT, as I said, has great tools, great ideas, and they really care about the credit union. So as far as evolving, I guess what I would say is, um, if you have pinch points, that there's areas that, are pain points for you and you haven't been able to find help for them, we have this opportunity where reach out to us. We can work with TCT and see if that's something that, our group at Vizo and their group at TCT, if we can put our heads together and come up with a solution. Again, because TCT and Vizo, we want you to succeed. We want to help you. So, as far as opportunities and evolution, I think it's up to you. What do you need? Let us know. Please reach out.
Okay. All right. Well, thank you all for joining. Any final thoughts for our listeners today from any of you? Tim, any final thoughts?
Yeah, I would just say, thank you very much for your support. It means a lot to us. And, please reach out. We'd love to show you these new tools. We think you'll be really happy with, the tools that TCT provides, and you'll make a new friend because it is really like working with a friend when you're working with Randy. So please reach out. We'd love to help.
All right. Randy or Josh, any final thoughts?
I would just say thank you. Thank you, thank you, thank you. When I was a banker early on going through training, I was sent out on this project looking at pricing and trying to figure out effective ways. So I've been doing this for a long time, but I remember going to some of the biggest banks in the country, New York, Los Angeles, San Francisco, and seeing what they were able to put together with their multi-million-dollar budgets. Now, this is back in the 70s, so $1 million was a lot of money then. And I thought, this is not fair. Small organizations should have good tools to help them make good decisions. So it's been kind of my life's work the last 40 years to create simple to use. I believe in Occam's razor. The simplest answer is usually the best. And so thank you for just giving me the opportunity to help, because that's what I want to do. I want to help.
Right.
And I would just say, again, reach out. TCT loves doing demos. They have a great tool, a vital signs report. They offer for free. Just if you're interested, start there. Give us a call. We'll work with you to get a demo scheduled, and TCT will be more than happy to go over that with you and show you where you're doing great, show you where you could, use some help, and then, what tools, do they have that could help you. So.
All right. Well, and I also feel like I need to give a quick plug. We are using Randy for some upcoming educational opportunities. So we have some webinars lined up for Randy. He's got a passion for helping those small credit unions. He's going to be speaking at our small credit union workshop here in August as well. That's a virtual event. So just a quick plug for the education side, because I know, Randy, you love that so much. So Randy, Tim, Josh, thank you all so much for joining and sharing your insights. Today's discussion highlighted not only the services available through TCT Risk Solutions, but also how strategic collaboration like this can help credit unions navigate challenges, improve operations, and position them for future success. I'd also like to take a minute. We got to thank our sponsor, our episode sponsor, which is Vizo Financial's 2026 Financial Conference. Registration is now open. Join Vizo Financial on September 16th through the 18th at the Omni Grove Park Inn in Asheville, North Carolina, for their largest event of the year, the Financial Conference. Get ready to dive into some of the biggest financial topics affecting credit unions today: interest rate, loan performance strategies, economic updates, investment and bond opportunities. Of course, we've got stablecoin and more, with sessions led by industry leaders and expert speakers. This year's conference will also feature valuable opportunities for networking, a chance to earn those CPE credits, as well as new and returning activities. You can choose from an afternoon at the spa, maybe go out, play a round of golf. We also have a tour of the Biltmore Estates. Or for those that like the outdoors, we've got a guided hike to some waterfalls, while all being surrounded by the stunning views of the Blue Ridge Mountains. So visit our website, www.vfccu.org, to learn more and to register today. Also, thank you to our listeners for tuning in. Don't forget to subscribe, and I hope you have a great day. Thank you so much. Bye-bye.